If you are over 65 and you are still filing your taxes on the standard Form 1040, you are using the wrong form. Not wrong as in illegal, wrong as in you are doing extra work. You are missing visual cues on your deductions, and you are almost certainly leaving the senior standard deduction benefit sitting on the table without realizing it. And nobody at the tax prep counter is going to stop and tell you there is a better option, because most of them just default to what they always use. Today, I'm going to show you exactly what the IRS created for retirees, what it does differently, what it protects you from, and why switching to it could be the simplest tax move you make this year. No complicated strategy, no loopholes, just the right form that the IRS specifically built for people exactly like you. This video is for educational purposes only and is not tax or financial advice. Consult a qualified tax professional before making decisions about your specific situation. My name is Kevin, and this is Kevin Reveals. Every week I break down the tax rules, the financial traps, and the real strategies that protect retirees from what nobody else is explaining. Subscribe right now and turn on notifications so you never miss a video. Let me start with a simple question. Have you ever heard of Form 1040 SR? Most people over 65 have not. And that is the problem. Because the IRS created Form 1040 SR specifically as a tax return option for seniors, and it has been available since 2020. Not brand new. Not an experiment. A fully official IRS document that millions of eligible retirees are still not using. Congress passed legislation requiring the IRS to build a better tax form for retirees. The IRS built it. And then most retirees never found out about it, because nobody told them. So what makes this form different? Form 1040 SR is designed specifically for taxpayers age 65 and older. It features easy-to-read deduction tables, larger print, cleaner layout, and a page dedicated to showing senior-specific standard deduction amounts in plain sight. No hunting through instructions. No guessing whether you qualify for an extra deduction. It is right there on the page. Who can use Form 1040 SR? You can use it if you are age 65 or older by the end of the 2026 tax year. There are no income limits and no filing status restrictions. A married couple filing jointly can use Form 1040 SR if at least one spouse is age 65 or older. And here is what surprises most people. It is not just for retirees with simple income. A 67-year-old with self-employment income, investment income, IRA withdrawals, pension payments, and Social Security can all be reported on Form 1040 SR. It handles every income type that the regular 1040 handles. It is not a stripped-down version. It is a redesigned version built around how retirees actually earn income. Now here is where it gets important. The standard deduction. Most retirees who are 65 or older are entitled to a higher standard deduction than younger filers. This is not a secret. It is built into the tax code. But the way the standard Form 1040 presents this information, many retirees miss it, miscalculate it, or simply do not realize it applies to them. Form 1040 SR fixes this. The form prominently displays the higher standard deduction available to taxpayers age 65 or older. It is right there, on the form, in large text, built into the deduction chart so you can see at a glance what your standard deduction actually is based on your age and filing status. You do not have to hunt for it in instructions. You do not have to remember that there is an extra amount. It is displayed directly on the return. Congress put that deduction chart there specifically because seniors were consistently underclaiming their standard deduction on the regular 1040. The larger print and visual layout of Form 1040 SR reduces that error, and in 2026 that deduction chart matters more than ever. Because this year there is something new layered on top of the existing senior standard deduction that makes Form 1040 SR more valuable than it has ever been. For 2026, there is a new bonus senior deduction available to qualifying taxpayers age 65 and older. This new $6,000 bonus deduction stacks on top of everything else you already receive on top of the base standard deduction, on top of the existing additional amount for being over 65. For a married couple where both spouses qualify, that is $12,000 in additional deductions that did not exist before. With multiple senior deductions now available, reviewing eligibility and income thresholds before filing can make a significant difference in your final tax bill. And Form 1040 SR for 2026 is designed to support all of these expanded deductions in a format that retirees can actually read and verify. Think about what this means in real dollar terms. A single filer over 65 in 2026 has the base standard deduction plus the additional amount for being over 65 plus potentially the new $6,000 senior bonus deduction. Stack those together, and you are talking about a total deduction figure that significantly reduces your federal taxable income before you even count a single itemized expense. Let me show you a real example of what this means. Take Margaret. She is 68, single filer. She has Social Security of $22,000, pension income of $30,000, and IRA withdrawals of $15,000, total income of $67,000. On the old Form 1040, Margaret would have to know to claim the additional standard deduction for being over 65. She would have to know to check whether she qualifies for the new $6,000 bonus deduction. She would have to navigate instructions written for a general audience of all ages to find the specific lines that apply to her situation. On Form 1040 SR, the deduction chart shows her exactly what her standard deduction is as a single filer over 65. If she qualifies for the senior bonus, that section is built for her. The form is laid out with her income sources in mind: Social Security, pension, retirement account distributions, all of it presented in a way that makes sense for her life. The end result is the same calculation either way. But the probability that Margaret gets it right, claims everything she is entitled to, and does not leave money on the table is significantly higher with the form that was designed for her. Now, let me address the questions that always come up. Does switching to Form 1040 SR save you money on its own? No. There is no penalty for using Form 1040 instead of Form 1040 SR. The forms calculate taxes the same way. The math is identical either way. What changes is the probability that you catch every deduction, every credit, and every senior-specific advantage that applies to your return. The form itself does not give you a tax break, but it makes it far less likely that you miss one you are already entitled to. Is it mandatory? No. It solely depends on the taxpayer's convenience. But convenience here is not just about comfort. It is about accuracy. A form designed for your income sources, your deduction categories, and your filing situation is going to produce a more accurate return than a general-purpose form where senior-specific items are buried in fine print. Can you still file electronically? Yes, Form 1040 SR can be filed electronically. Most major tax software platforms support it and will generate it automatically if you are eligible. Even if the software selects the form for you automatically, knowing that it exists means you can verify it is being used. It means you can confirm that your senior deduction amounts are correct. It means you are in control of your own return rather than just clicking through screens. Now here is something important about the connection between Form 1040 SR and the RMA issue I covered in my last video. The deductions you claim on your tax return affect your taxable income. But RMA is calculated on your MEGI, your modified adjusted gross income, which is a different number than your taxable income. The standard deduction, the over 65 addition, and even the new senior bonus deduction reduce your taxable income, but they do not reduce your MEGI. That is a critical distinction. It means the 1040 SR helps you on federal income taxes. It does not directly lower your Medicare surcharges. Managing MEGI requires a different set of strategies involving Roth accounts, qualified charitable distributions, and income timing. But filing correctly on 1040 SR ensures you are paying the lowest possible federal income tax on your retirement income, which is the foundation everything else is built on. Let me also talk about a mistake that cost retirees money in this exact area. Many retirees over 65 who switched to the standard deduction in 2017 when the Tax Cuts and Jobs Act nearly doubled it have never gone back to compare. They just default to standard deduction every year. And while the standard deduction is often the right call, the SALT deduction cap changed in 2026. It jumped from $10,000 to $40,400. If you live in a high property tax state and you were itemizing before 2017, or if you have significant state and local taxes, running the comparison again with the new SALT cap may tell you that itemizing actually beats your standard deduction in 2026. You need to run both scenarios. Form 1040 SR supports both approaches. You can use it whether you plan to itemize or take the standard deduction. Switching to Form 1040 SR does not lock you into anything. You keep all the same options. You just have a clearer, more readable form that is designed around your financial life. Here's what this all comes down to. The IRS created Form 1040 SR because Congress recognized that the standard Form 1040 was not built for the income situations, deduction categories, and visual needs of retirees. The form has been sitting there since 2020. Most retirees have never used it. Most tax preparers never mention it unless you ask. If you are 65 or older, if you have Social Security, pension income, IRA withdrawals, 401k distributions, or any combination of retirement income, if you want a tax return that is laid out clearly, displays your senior deductions prominently, and supports both the standard deduction and itemizing. Form 1040 SR is your form. And in 2026 specifically, with the new senior bonus deduction of $6,000 now in place, this is the most important year in recent memory to make sure your return is capturing every senior-specific advantage that you are legally entitled to. Stop filing on a form designed for a 32-year-old with a W-2. Use the form the IRS built for you. Next week on Kevin Reveals, I am breaking down the 7 IRS forms that retirees must deal with in 2026 and the penalties that apply if you miss them. One of them carries a penalty that starts at 25% of your account balance. Most retirees do not find out until the IRS sends them a notice. Do not miss that video. Subscribe now and I will see you there.